Okay?
Yes, sir.
It's all right. Today's the meeting for April 28th. Let's look at the agenda. It's a,
You want to call it to order first?
I call this meeting to order. That's kind of like Russ.
Amen.
There we go. Check that off.
Check that out. Let's see, we got two pieces of public out there. Do you want to make a comment now? Good. Roll call. Tori, you start.
Tori Bombard, trustee.
Christopher Diaz, trustee.
Tim Hart, trustee.
Jeff Stearns, trustee.
Gene Strickland.
Ron Tomlin, trustee.
Tyler.
Consulting. Jacob Peacock, Anchor Consulting. Jeff Michelle, Voice Association.
Carrie Wesley, staff.
Where's she at?
Rick.
Rick Lilliquist, trustee.
Sherry Matthews, staff.
Sorry, Carrie, I didn't see you behind the podium. Very good. Okay, now we'll look at the agenda.
Move approval of the agenda.
I'll second it.
All in favor?
Aye.
All right.
Do you have any other business to chat about? I think we'll move that to a different location. Let's review the minutes of March 24th and April 7th, the regular board meeting and the special meeting.
Move approval.
I'll second it.
All in favor?
Aye.
And that is for both of them, correct?
Yes.
Good. I'm going to start off with the presentation by ANCO. Tyler, are you going to handle,
Yeah.
start off with that?
Yeah, I'll go through the flash reports with you all, and then Jacob is going to take you through the DC plan on RFPs. So let's start off with the pension flash report, starting on page 1. Obviously, it was a rocky month for the stock market with everything going on in the U.S. right now. But overall, relative to the plan's benchmark, you all performed pretty well. Down 7.8% for the month of March, where the benchmark was down 8.8%. Domestic equities, your portfolio held up well there. Sawgrass in particular did very well, was only down about 6.5% for the month. The benchmark was down by about 9.8%. We continue to see that value stocks, and in particular smaller cap stocks, did worse than the larger cap growth companies, and that's been a continuation of a theme that we've seen the last number of years, where larger cap growth companies are just dominating the market right now, and that continued during the downturn. The other manager that did well, that we kind of expected to do well, is Vanguard Equity Income, which we implemented last year, was down 13.4%. The benchmark was down 17%, so good downside protection there. So overall, the domestic equity portfolio held up well for the month and also for the quarter, outperforming its benchmark by about 1.5% for the quarter, where the domestic equity portfolio for the quarter was down about 19.4%, and the benchmark was down about 20.9%. So even though things were rocky during the quarter, your portfolio held up well. And the other good news is that since the quarter ended, domestic equities up about 17% so far this quarter. So, us rebalancing back into stocks, was a good decision so far, and things are looking good from that perspective. So, we're happy about that, obviously. The one point on this page that was a very weak point was the Tortoise Direct Opportunities Fund. That's that MLP fund that has direct exposure to energy companies. I'm sure you saw that the energy sector was hit really, really hard. Energy stocks were down about 50% for the quarter, and so that you see the reflection there. Tortoise going down about 50% during the quarter. So they were hit very, very hard. While you also saw people were actually paying other people to take their oil. Oil futures contracts for May delivery actually fell to a negative level because there's just no storage for all the excess oil that's out there. So oil prices are very, very low right now. Tortoise did elect to extend that fund another year because they just don't want to be having to sell into this type of market environment, because there's probably only one way that MLPs can go at this point, and that's up, because they're at such low levels right now. I think the yield right now on MLPs is something around 20% yield on a MLP security. So the price is extraordinarily low levels, and so they're not going to want to sell into that environment. Are there any questions there on that fund? No. Okay. So let's move on to page 2. International also held up well relative to its benchmark for the quarter. Was down about 22.5%. The benchmark was down 23.36%. WCM in particular did well, was down about 16.5% for the quarter. The benchmark was down 22.8% as well. TSW continues to be kind of challenged in a value-oriented market. We added a couple benchmarks here. If you look, we are also now showing the EFI growth and EFI value benchmarks, because WCM has a growth tilt to it, while TSW has a value tilt to it, and you can see that versus the value benchmark, they're still outperforming. So it's really been, that portfolio has really been challenged from just a market environment standpoint, where value stocks have been out of favor. On the emerging markets side, we only had a couple of months with your new emerging market managers, but they kind of performed as expected. If you remember, we selected RBC to give us some downside protection on the emerging markets area, and that performed as expected, protecting on the down markets. On your private equity side, we don't have values right now, but just to kind of give you an update there, Aberdeen is seeing a couple of challenges, but by and large is seeing most of their portfolio companies are in good position, have cash on hand, don't expect any material devaluations in their companies right now. Same thing with Accolade Growth as well. Accolade Growth in particular, if you remember, we brought them in. They focus on growth-oriented companies. There's no leverage on those companies. They have a ton of cash on hand. Some of them have several years of cash on hand. They've kind of furloughed a lot of employees just to kind of make do with what they have right now. But they don't see really any of those portfolio companies in trouble at this point. Okay, going to page 3. Looking at the domestic fixed income market, you see Orleans and Garcia Hamilton. This is where we were challenged from a benchmark perspective. Our domestic fixed income was down about 2% for the quarter, whereas the fixed income policy was down about 0.6%, or for the month, I'm sorry. The reason for that is if you weren't in treasuries during the month, you probably had losses on your portfolio. Everything went to less risky assets, so everybody moved out of risky assets, including corporate bonds, and moved into treasuries. So treasuries were up tremendously. For the quarter, treasuries were up about 8%, whereas corporate bonds were down about 2%. So most investment managers struggled in this environment because most of them don't hold a majority of treasuries. Most of them hold corporate bonds to get the extra yield on those types of investments, to get a higher return over time. But during the quarter, that was obviously worked against them. On the global fixed income side, global fixed income was also down more than the benchmark, down about 7%. Again, having some higher yielding securities in there versus the benchmark, which some of the benchmark is made up a lot of treasuries, was a challenge for them as well. On the non-core fixed income side, we do expect Corbin. If you remember the email that I sent out, Corbin we expect to be down significantly this quarter. They had a lot of exposure to collateralized loan obligations, which really were hit hard during the quarter. So we do expect that they were down pretty significantly during the quarter. We do have some concerns about that portfolio, so we may be looking at doing a review on that in the coming months. No action right now because we obviously don't want to be any kind of forced sellers in this type of market environment, but that may be an area where we look at making some changes in the future. Okay. As far as your other non-core fixed income management, it was touch base with a lot of them. Golub does expect some write-downs. Raven does not expect any write-downs at this point. They think that their investments are going to hold up well in this market environment, even if they have covenants in place that even if some of those companies do have to restructure, that they'll be able to take advantage of that because of the covenants that they have in place on their portfolio. On the real estate side,
Corbin fully drawn?
what's that?
Is Corbin fully drawn?
Yeah, so Corbin is kind of an open-end fund. It's quarterly liquidity, so they're fully drawn, and we can get quarterly liquidity from them. So, you know, they're a place where, you know, if we wanted to reshuffle things or maybe just decrease the exposure there to them and look at some other opportunities in non-core fixed income, we're able to do that pretty easily.
Do they have limitations for the quarter as far as when you can apply for takeout, like?
Yeah, there'll be some kind of time limitation. I'm not sure exactly what it is off the top of my head. It's typically about 30 or 60 days is usually the notice period that you have to give on quarterly liquidity funds. Okay. Moving on to page 4 with real.
This is Pedro. I just wanted to say, and I don't know, Tyler, if you've been able to maybe speak to Corbin, but and with other clients in some similar type funds, they've been, you know, they do have the right to put. We talked about it before, these gates.
Right.
So they won't allow for any kind of redemptions, and
Yep.
so I don't know if they put that in place. I know some other managers in this, you know, with similar structures have put that in place, but that would be, you know, that would just be another
Yeah.
question potentially for in terms of, you know, if we want to get out, are we allowed to get out at this point?
Yeah, it's a good point, Pedro. Right now, Corbin, there's no gate. We have seen a lot of gates with, especially real estate funds, because that's been a place where people have kind of gone to for liquidity right now, and so a lot of the real estate funds have put up gates at this point. We haven't seen that with Corbin yet, but we'll certainly make sure that if there's any changes. But like I said, we're not recommending any changes right now because the credit market's so distressed at this point. We don't want to be forced sellers into that type of market, so we certainly want to take kind of a long-term view of this and do this over a long-term time period if we do want to make a change there. We just had some kind of concerns coming from this market downturn and in that portfolio, and just want to be transparent about those concerns at this point.
What does gates mean?
A gate just means if you have an open-end fund like with Corbin or like you have with JP Morgan on the real estate, where normally you can get out with quarterly liquidity, sometimes so that they're not forced to sell buildings or assets or anything else, they'll put up a redemption gate, which is basically anybody who wants to get out, they'll usually pay it kind of pro rata over a certain amount of time period. So eventually you are able to liquidate out of that fund, but the whole point is that they want to protect everybody else that's in the fund as well. So let's say that we want to stick in Corbin. Well, we don't want all the other investors that are in Corbin to put in redemptions and then be to force sell out of it and, you know, realize those losses and not be able to get some of those, you know, get the rebound back, essentially selling at the bottom. So they put up gates to protect all of the investors in the fund if they kind of see that. Now, if they're able to sell, if it's a small redemption or a couple of investors want to redeem and they can sell that, you know, during the normal course of business, they're fine with that. But if they start seeing a large amount of redemptions, they'll say, hey, we need to slow this down and do it over time in an orderly manner so that we don't, you know, we aren't forced to sell at the bottom at a distressed level. On the real estate side, on page 4, JP Morgan was up 0.71% for the quarter, or for the month, about 1.57% for the quarter. As far as real estate goes, we do expect most of the managers or the values are going to stay kind of put at this point, and it's just going to kind of depend on how things go over the next couple of months, what we see in the coming quarters as far as real estate prices go. Obviously, if we hit a recession, we would expect some write-downs of real estate type assets, but right now we think that they're holding up well at this point. And then finally, on your alternatives, Entrust has some public equity securities. We do expect some losses there on the Entrust side. Brookfield, however, we're expecting about 2% return on those core infrastructure assets, so good protection there in a volatile time period. So that's it for the monthly update. Like I said, your portfolio held up pretty well relative to others. I do think the timing of the pension obligation bond was a good one. We were able to deploy capital back into the stock market, and we've seen some rebound there. So that should help performance going forward as well. I think I mentioned in my email to you all, I think fiscal year to date, we're actually pretty close to flat right now, which is incredible considering everything that's going on in the world right now. So the portfolio is in pretty good shape, all things considering. So right now, we're not recommending any changes, but that's it, kind of the update there.
Did I hear you right? You said for the fiscal year, as of right now, we're pretty close to flat?
Yeah.
Yay.
If I heard you right, you said compared to others, this fund's doing all right?
Correct, yes. This is one of the better returns that I've seen so far for the month and for the quarter. And, you know, a lot of it has to do with the private assets, which we don't have values on yet. So, you know, there could be some movement there, especially, you know, Corbin, when they value, there's going to be some movement down as far as your return goes. But certainly, you know, one of the better returns so far. Most returns we're seeing for the we're seeing mostly like negative 13, 14% for the quarter, and you were down 11.76% for the quarter so far. So certainly have held up a lot better than a lot of plans have.
Thank you. Mr. Chairman, I'm maybe like Ron, I'm not fully understanding when you say we're pretty much flat. Could you elaborate on that? I mean, I'm looking at your tables here for the total fund fiscal year to date, minus 7.31.
Right.
Explain what you meant by we're pretty much flat.
As of today, because since the quarter ended, the stock market's up 17% since the quarter ended. So you were down negative 7.3 as of quarter end. Now the stock market's gone back up 17%. Okay, and you're allocated, you know, 45% to domestic equity. So that's going to drive your return on investment for the quarter to date so far is probably about, 10, 11% right now.
So if you did a snapshot right now, today, our fiscal year to date on total fund would be?
Probably about flat. You know, I don't have
Zero.
exact numbers, but because of the rebound in stocks, I think you're about flat at this point. And because you protected so well on the downside as well. And I know I've heard good reports out of Sawgrass that not only were they able to protect on the downside, but they've done well so far on the upside as well. So, hopefully we have some outperformance there. Hopefully on your small cap value, we're going to see some outperformance in this environment where we typically, when stock market starts to go back up, we typically see small cap value stocks tend to outperform on the way back up. We'll see if that happens this quarter, but that's kind of the normal thing in these type of market environments. As far as I know, we talked the last couple of meetings about maybe some opportunities in the future. So we are still vetting a few of those opportunities right now, but we do certainly expect to have something within the next couple of weeks for you all to look at. We do want to look at distressed debt and also private equity secondaries, because we think that those are going to be good opportunities in the next few months where some companies are obviously going to need some help in turning around, or there's going to be some liquidity opportunities in private equity as well, where portfolio managers or other funds are maybe going to have a liquidity crunch and they're going to have to sell their private equity stakes on the secondary market, and we may be able to get meaningful discounts there. So there are going to be some good opportunities for us to deploy some capital, and again, we'll have those opportunities in the next couple of weeks. All of those funds as well, you should know, we don't need to close right away. We don't have to be a part of the first close. We can take our time with these and vet them properly and have interviews and all those kinds of things. We will be able to get in, and have the returns from the beginning of the fund, essentially. We just have to pay catch-up interest to the first investors. Sometimes that's a really good thing, because then you kind of already know you're going to get. You may look at the fund and say, we're going to get 17, 18% right off the bat here, and we only have to pay 8% back interest to previous investors. So sometimes that actually works out well. But those opportunities are coming.
So then I guess Mike will be here for the next meeting since you had to take this meeting.
Right? That's right.
Right.
The negative numbers, we know who
Yeah.
gets this note. Mike's probably watching on TV right now going, hey. No, we just figured with,
social distancing and all that stuff. Jacob's here today to go over the DC plans. We just figured 3 people is probably overkill in this, you know, with everything that's going on right now.
Covering for Mike.
Well, he was here last time. He was here last time, so.
Stop covering for Mike. He didn't want to be here with this report, you know that.
Okay.
And make sure you tell him I said so.
He's probably watching, you said, Ron, so wave to him.
Typing into you. Okay, very good.
Any other questions? No, okay, so on the DC plans, just really quickly there, you know, we've been talking about the one fund FMI for a long time now. We certainly expected them to protect on the downside. They sent us over some daily attribution where they did show that on the days where the market went down, they did protect on those down days. Unfortunately, on the up days, they were way behind on the up days, and it was a very volatile market. But at this point, we certainly think this is where they should have shined, and think that we probably need to be making a change at this point on the FMI. So we will bring a search at some point over the next couple meetings.
The FMI large cap fund.
Yeah. Yep. And that's on page 3. And so you can see for the month, they were down 14.57%. The market was down 13.21%. And then the longer term numbers are obviously well behind the benchmark there. Again, we typically saw them in the past protect on the downside. And I guess they did it during the days where the market was down, but it certainly wasn't enough to make up for the past performance. And so at this point, I don't see a reason to continue to have them in the plan.
Are they the only one that's under watch right now?
Yes.
What about that other one, the Franklin?
Well, the Franklin Fund, yes. I mean, the performance was not very good there either. That's page 6. So Ron, they're technically under watch, but we know the issues there is that, you know, that's a fund that employees want. They've asked for it specifically to be included in the plan. We've kind of previously said we don't think it's the greatest fund, but, you know, as long as employees are being educated on it, if they want it in the plan, we certainly understand that, but they need to be educated by TIA or whoever the record keeper is about the issues with this fund. It's a value-oriented fund, so value-oriented stocks have been out of favor, and that was certainly the case in this quarter. And it's also got a lot of high-yield debt in it, and high yield has done well the last few years, but this quarter did really, really poorly because everybody fled away from, you know, riskier assets, which high-yield debt is a riskier asset. So this is what we've said all along, is that, you know, over time this fund is probably going to do okay, but it's a riskier, more volatile fund. And so people just need to understand that even though they're getting a high yield from it, a high dividend payment, which is what they like out of it, the price of it's going to be very volatile. And so they need to understand that and be educated on it. And we followed up with TIA and made sure that they're doing that type of education as well.
Do you have any indication of how they did in April? Did they bounce back?
The Franklin Income, no, I don't know at this point how they've done so far.
Any other questions? Very good. This is heading on to talk about the record keeping, I guess.
Well, I think we had one other thing, which was,
Oh, did I miss one?
well, the discussion of the expected rate of return. So at your, not last meeting, but 2 meetings ago when we had Jeff Ambrose on to pass the actuarial evaluation. We passed the actuarial evaluation, but along with that, as the board, you need to approve your expected rate of return over the next year, next several years, and long-term thereafter. It's simply an exercise that the state requires all pension boards to do. So you just need to pass by motion that you think that 7.25% is a reasonable expected rate of return over the next year, next several years, and long-term thereafter.
Jeff? Is it reasonable?
We have to make a
And our
motion.
investment advisor recommends what?
We think that for right now that's a reasonable expected rate of return, and certainly you know, that expected rate of return does need to kind of match up with the actuarial valuation. So having passed that, you should probably pass 7.25%. Now, having said that, we do think that what we can do over the coming year is do an asset allocation study and see if, have that discussion about whether or not we think for the long term, that's still a reasonable expected rate of return. But also address, I know there was some concerns from Tim and Tori 2 meetings ago about the international equity exposure, and also take a look at that and just make sure that everybody is comfortable with that going forward as well. So we can kind of tackle those two things simultaneously. So we do think over the next year, do an asset allocation study and have that conversation. But for right now, we think that that's a reasonable rate of return. You're certainly below the average pension plan out there. Most pension plans are right around 7.5 right now. So being 7.25 is certainly very reasonable at this point.
Move approval of 7.25.
I'll second it.
All in favor?
Aye.
On the recommendation of our investment consultant.
Greg, did you approve?
Aye.
Okay. I'm sitting next to you now, I'm hearing.
Question for you, if we did choose to drop it to 7%, how would that affect our agreements with the bond money we received, and also
It wouldn't affect those are already locked
they're
in.
locked in at 7.25?
The effect it would have, however, is that it would force contribution levels up
Oh,
Yep.
for both employees and the employer.
yeah,
So if
definitely.
you expect to earn less on your assets, you gotta make it up somehow
Yep.
to still be able to cover expected outflows and benefits.
But it wouldn't affect what credit we give them for that.
No.
Okay. That's the question. I knew it would cost city more money and the employees too, for sure.
Yep.
Okay. Very good.
So yeah, next,
Hmm?
turn it over to Jacob for the
Yep.
the RFP.
Can I actually, before we go that, because I'm anticipating this will be an extended discussion.
Yes.
I'm wondering if we could move to the drop issue. Because at a previous meeting as well, I think we deferred our
Yeah, we did.
discussion of what rate of return we should offer on drop assets for the coming year. It kind of goes along with the 7.25% discussion. I wonder if we could do that first, if you wouldn't mind, and kind
that's
of
fine
move
with
that
me.
one out of the way.
That's okay. Let's do that then.
So,
So that would be Pedro. Pedro wanted to review the drop ordinance first with you guys. Pedro, are you still with us?
Yes, I'm here. Hi, good morning, everyone.
Good morning.
Hopefully everyone's doing okay.
Yes, sir.
So I did, with respect to the drop, and I'm just opening it up, and I apologize,
We went to you out of turn. Messed you
no,
up.
it's okay. I was actually, I'm watching you guys, on live stream. There's a little bit of a delay. I'm actually watching Jeff speak right now, so.
well, twice is good.
Oh my gosh.
For some.
Poor Gene. Gene knows how it feels. He did the same
The
thing.
other side of that, the delay when you're watching.
Okay, yeah.
Last meeting,
What?
last meeting when you were,
Yeah.
you were delayed.
Yeah, that was confusing.
Now Pedro's delayed.
Pedro's doing that now.
Well, I'm on the other side now, that's what you're saying.
It's much better.
I could see you guys, hear everybody was saying it was perfect, but if I said something, I was 5 minutes late. And he's on the go-to? What is he on?
Ron, may I ask you to sit forward to your microphone, please? Thank you.
I can do that,
There you go. They couldn't
he's
see
but
you.
now I can't see him, see?
They couldn't see you, and they couldn't hear you. Communications
Are we
are
waiting,
awesome.
are we waiting for Pedro?
Pedro's pulling up the drop.
Oh.
He has the ordinance, so he's looking at the ordinance.
What's the purpose of this discussion, Jeff? What-
Because we need
We have to
set
set
an
the rate
interest
on
rate.
drop accounts for the next fiscal year. What
Okay,
we're gonna
fine.
give people who are in drop, what are we gonna credit their accounts with, how much interest?
Did this ordinance say 3%? I thought, is that what it said?
Up to 3%.
Oh, up to 3, okay.
And to
So we
let
get
you
to, we
know
get
the
to
reason,
decide.
Okay, yes?
the reason that we brought this, because the conversation at the last meeting was October 1st would take effect. That's not true, because usually we decide on that at the actuary meeting. and then we send a 60-day notice out from that meeting. So usually May 31st payment is when people can decide to either move out of the 3% drop or self-direct. So when you change that rate, I have to give a notice to the employees that they have 60 days. So what'll happen is, since we prolonged it now to April, we'll give them to June 30th. That payment there, they can either stay in the drop based upon what you rate that you decide on, or they can self-direct.
So the ordinance says, we set the rate, and the employee can decide whether they want to stay in the program at that rate, or they can transfer their money
To the
out
DC
To
plan,
the
to the
DC.
DC plan.
and get whatever they,
And once they get to the DC plan, they get to choose how they invest their money,
Yes, sir.
but they never can come back to
Yes,
drop.
sir. Well, they can
they're
change it
still
the
in
following
drop,
year.
it's just a
I
question
mean,
of
they're
how
still in drop. They can never come back to a fixed rate.
The future
They can change the
contribution.
following year. They
Next year, when we set the rate, they could come back if they.
Oh,
But they
okay.
cannot bring those funds
I
that they
thought it said they could not come back, but that's just for the year?
No, the funds that they self-directed, they are not allowed to bring those back into. the
That's what I'm
fund.
saying.
Yes, sir.
So they could take all their funds out
Yes, sir.
and move them over. And once they do that, they cannot come back.
The future.
With those
fund-
The future monies can be,
Yes, sir.
and the future monies will be automatically put into the fixed account?
Whatever they decide, they can.
They decide
self-direct.
once a year whether they want to keep them in both accounts, or, so they decide once a year depending on where we set the fixed
Yes, sir.
rate.
Yes, sir.
So are we getting ready to set the fixed rate?
Well, that's what Pedro's reading
Need
the
to
ordinance
decide
to
and
make
give
sure we're
people
doing
notice
this
so they can
correctly.
make a
And why is
decision.
Pedro involved in that?
But you have to have an ordinance.
Well, we have an ordinance.
Well, yeah, the ordinance is already signed and approved. It's,
But because he was our attorney and there was a question about the October 1st date, because that's what was being said at the last meeting, that change would not affect anyone until October 1st. I sent the ordinance out because the ordinance does not state that. It states that once it's elected upon, the employees have 60 days, not October 1st to make.
Instead of it being October 1st,
Yes, sir.
it's
so
60
we're
days
gonna
from when
ask
we
him
decide.
what
Just to
his
make sure that we're,
opinion is?
well, just to,
I'm
go ahead, Pedro.
I'm sorry, I know, and I apologize for taking long. My computer kind of froze up on me. But essentially what Sherry was saying is correct. And I don't recall exactly the discussion at the last meeting, but there is no October 1st requirement that the board set it. Essentially, the ordinance only provides that each member, the Board of Trustees shall review and set the variable interest rate once each year. Within 60 days of announcing the variable interest rate, each member of the drop may elect to transfer all, some, or none of the drop account balance and future drop account accruals to the DC plan. So it's really just, it's whenever the board sets the rate, that is what triggers the election period for the participants to make their decision.
I didn't hear all that.
So
Basically,
60
it's
days
what-
from when we decide,
Yeah,
okay.
It's what Sherry
they have to
said.
decide.
He just repeated what Sherry said, so.
Okay. Yep. Well, that's,
So let's, discussion about the rate. Currently, we're at 3%, right?
Yes, sir.
Which is the maximum that we can offer.
Yes.
Maximum we can offer. Is there a thought process of what we should be for the next year, the next 12 months after 60 days? Or the next, till we
Yeah, I'd-
choose to do it again?
Ron, I mean,
Rick,
That's Tim.
that's Tim.
yeah,
I know
I'm
he's
thinking
shaved.
Ron and I'm looking
I
at
know
Tim.
he's shaved.
Confused, look a lot alike.
Ron, I'm likely to look at you and say, Tim. Anyhow, Tim, if I could, mate, I'd like to say, so we just passed the 7.25%, what we anticipate as far as our expected rate of return for next year and the next several years. I guess I would question why we would want to go with anything other than 3%, having passed the 7.25% for the expected rate of return.
My thought would be is a 7.25, we're looking over a long period of time. The interest rate, or this rate here we have, is a short-term period.
It's a one-year decision.
It's a one-year decision, not a multi-year estimate, so.
But we set the 7.25% every year.
As a long-term
a long-term
expectation for a
expectation.
long-term rate of return.
We're
Just
not
as we are the
expecting we're
just
not
as we are
expecting
the drop.
7.25 this year, I don't think.
But that is what Tyler stated. He did say short, mid, and long-term rate of return. Didn't you say that just now?
Yes, but, so that's the language that we have to use in the letter that goes to the state. I think realistically, trying to set an interest rate level for next year is impossible. I mean, who knows what interest rates are gonna be over the next year? Or, you know, what we're gonna earn on
Rate
the.
of return.
Right, what the rate of return is gonna be over the next year. I mean, I don't know what that number is gonna be, but that's what we have to say to the state. So,
guess-
take that with a little bit of a grain of salt.
Would you anticipate it being less than 3%?
This is Pedro. The only question here is, it's not whether we're right or wrong. It's just whether it's a reasonable choice. So, you know, I think obviously what Tyler is saying, and I think what you know, what we're all kind of experiencing, this is unprecedented times. So, I don't think that it's unreasonable to be taking these measures, and I don't think anybody is going to hold you accountable to getting it right, quote unquote. Does that make sense?
What has it been for the last couple of years?
It's always been 3.
I beg your pardon?
Well, it's been 3 except for
drop
the.
rate?
Yeah, has it been 3%?
Yes.
Well, remember, it was 6.
Well,
After
when,
the initial-
be 6.5.
with this ordinance, it's been
Yeah,
3%.
way back.
Yes,
Up until 2011, 2012.
yes,
So it's been 3% since we changed it?
Yes.
Yes.
It's
yes,
fixed?
yes, sir.
Okay, and we've done better than that, obviously, every year.
Yes, we did.
Why
Gene,
wouldn't we continue to 3%?
That's what we're asking.
well, that's what we're asking. We did a study.
Take formal action.
Ready?
Make a motion.
I recommend 3%.
Second?
All in favor?
Aye.
Aye.
Any nays?
Nays?
Okay, good,
I'm iffy, but I'll go along with it.
okay.
I'm with you.
Pardon?
I mean,
Whew.
I think dropping it to a 2.5% rate is meaningless as far as, since we have an opportunity next year too, so.
And just,
Were
I'm
you
comfortable
worried
with the
about
3.
coming here?
Yes.
and not that this should necessarily reflect on how we do that, but remember that the way the ordinance was also written, and I think, Pedro, you can confirm this, is that to the extent we're above or below 3% in any given year, that benefit or that penalty is reflected in the employer's contribution rate.
Correct.
It does not affect the employee's contribution rate. And that was a requirement at the time, that it couldn't impact the employee's rate.
That's true. We
That's
wrote it.
correct.
Okay. So we're spending city money, not employee money.
That's the reason I'm iffy, but I'll go along with it.
Or,
flip
to
side.
on average, it's actually been a benefit to the city over
Right,
since we've been doing it,
Yes, it has.
The city has been getting benefits in the last couple of years. So.
net benefit.
Do we want to continue with Pedro while he's hot? And it delays you a little bit, but does that make sense to the
Yes.
board?
Yes.
That's fine.
We pay him by the hour, don't we?
Yes, sir.
Pedro, continue on. You have a discussion of the ordinance amendment for the FRS mortality table?
Great, yes, thank you. So we do have, we had a call last week, Sherry, myself, and Jeff Ambrose, GRS. And I think, and you guys may have discussed this before, but essentially, the issue here is that where the actuarial equivalence definition that we currently have as part of our ordinance, Jeff, GRS, Gabriel and Smith, had a problem with the way that it was, with the language that it was using, and I'm actually pulling it up now so I can kind of read you what the existing language is, and then I think it'll help you understand what the issue is, and then what we're proposing as to remedy the situation. So currently, The ordinance provides that the actuarial equivalent means a benefit or amount of equal value based upon the mortality table and interest rate used in the most recent state-accepted actuarial valuation as required by federal law. So, for a host of reasons, this definition is probably not very appropriate at this point. First and foremost, the problem with the state-accepted actuarial valuation report is that they generally, at least historically, they don't approve these things right when we turn them in. Oftentimes, they're probably 2 and 3 years behind, quite frankly. So, and then with the subsequent changes to the statute, where we are required to use mortality tables that are implemented by the Florida retirement system, two of the most recent ones, just Gabriel Smith thought that it would be better to revise this definition to just mirror really what we're doing currently and the way that they're evaluating these actuarial equivalents. And just kind of as a point of reference, the actuarial equivalence is what's used when they are deciding between different optional forms of benefit. So, if I choose a life only, or if I choose a 50% joint annuitant, JNS, joint survivor annuitant, that presumably the benefit equals the same pot of money. It's just broken out differently, right? It's paid out differently in a different schedule. So the factors that GRS uses when it performs these calculations for actuarial equivalence, he just wanted to rectify or revise the ordinance to accurately reflect what it is that they're doing. So we had a call last week, Sherry, myself, Jeff, and essentially he sent me an email afterwards with suggested language that he would like to include. And I actually incorporated that into a draft ordinance amendment, which I'm going to be sending over to Sherry. Obviously, presuming that the board is comfortable with it. But really, what his suggestion was to include that the actuarial equivalence, and I'm going to read you the language that he suggested. It's only about a sentence long. Don't ask me to explain exactly what these things mean, but in actuarial terms, I'm sure that they are very, very appropriate. So it means a 7.25% interest rate, which that one I got, and the PUB 2010 headcount weighted general below median healthy retiree mortality tables, set back 1 year for males and 0 for females, projected to 2020 using the MP 2018 mortality improvement projection scale, blending 50% male rates and 50% female rates. So those are the conditions, assumptions that the actuary uses when it's making these calculations for actuarial equivalence. So really the point of the ordinance amendment is just, long story short, the point of the ordinance amendment is just to match what it is that we do and how we perform it.
But Pedro, and maybe this is a Jeff Ambrose question, that language appears to be very specific and it's referring to a very specific table.
Yep.
But isn't it the fact that we're required to change which table we use whenever the state changes their table?
Well, for funding purposes, yes. So for our valuation report, that's correct. But this, and I had the same discussion with Jeff when we spoke last week, and I just wanted to make sure. But so this is not necessarily what's going to be used for funding purposes. This is what is used when they are evaluating different forms of benefits to make sure that they are actuarial equivalent.
I get that, but why wouldn't we want to use the most? Why wouldn't we want to use the table that we're supposed to use, that we have to change to each year? Why do we want to lock a particular table in stone? Because that suggests to me that at some point in the future, when Jeff decides that those old tables are no longer accurate, he's going to want to change, and then we're going to have to do another ordinance change. Isn't there a way to write this so that it refers?
And I raised that as well, and I essentially I suggested perhaps just having language to the effect of, based on what the plan actuary would recommend at the time, so that we wouldn't have this issue. And I agree, I don't generally like to be this specific. But the way that Jeff explained it to me was that this table, that this would be in play for a while. And that obviously, if it ever needs to be changed, then we could make that change. But he didn't expect it to be changed anytime in the near future. But we can certainly go back and maybe tweak it or play around with it and get something that maybe Jeff is a little bit more comfortable with, rather than just having kind of a blanket, whatever the actuary recommends.
I'm wondering if it could be something, instead of putting it in, being that specific in the ordinance, is there any way to leave that up to this board so that we don't have to go back to the city commission all the time whenever we want to change it, that it shall be, that it may be that exact same definition for now, but it would be as approved by the board, and then when Jeff recommends that we use a different table, then the board would have to take action, but that we wouldn't have to go back to the city commission?
Yeah, that's a good thought. That's an excellent thought. We could leave it in terms of just maybe, as you suggested, have it tweak the definition to a more kind of general verbiage, and then have the decision made at the board level, either via policy or just as you mentioned at a meeting where the board would take formal action and adopt or update the tables accordingly. Yeah, that's a good thought. We could absolutely do that. I'm sure we could do that.
Why would we have something stated in an ordinance that would be different than how we're going to fund it? You said that's not the way we're funding that.
It's not.
Is that the
So
funding
it's
thing has to
not.
change each year?
And it's a good question. It's not contradicting. It's not in opposition to what we're using for the valuation purposes. It's just it doesn't necessarily come into play when the mortality tables that you're using for your valuation are not, I guess, the same mortality tables that Jeff is using for actuarial equivalent.
I don't think it's,
And Jeff said he would be available via phone if we want to ask him those questions. And I apologize, I just don't know the specifics. I know we discussed it when he and I spoke, and I kind of raised the same question that you all are raising now. And my understanding, just the gist of it, was that it's two different tracks, two different methods.
Yeah.
And my only issue was that instead of trying to stick it in the ordinance, that the ordinance should delegate that to the board, and the board can adopt an actuarial equivalence definition.
Yeah.
And change it
No,
whenever
I
we need
agree.
to change it based on the actuary's recommendation, instead of having to go back to the city commission. That just seems like, first of all, it's gonna be pretty confusing when we have to go to the city commission each time and explain what the heck we're doing. And I presume he's gonna wanna change this kind of thing every couple of years, depending on what table he thinks is appropriate. And I think that should be something that comes to the board, not that we're trying to run through the city commission, if that's.
well, I don't think it's the actuary. I think we're with the Florida retirement system, when we submit all of our reports to them, whatever the tables that they're mandating, we mirror.
But that's not this. This is actuarial equivalent, and we can adopt what we want to adopt.
Right, well, there's
It
two,
doesn't have to be the same as what we do for funding. I would agree that if we could keep them consistent, that's a
Right.
good idea. But I'm just saying, instead of trying to memorialize it in an ordinance, it should be something that's delegated for the board here to decide on whenever we need to make that kind of change. Just as we decide on actuarial assumptions each year and approve them when we approve the actuarial report for funding purposes.
I agree with you, Jeff, because we've changed, get back to your question, Tim, there was two things. There's always a mortuary table, and then there's how are you gonna fund it? Like, we changed our assumptions about, 3 or 4 years ago, when we went to entry age, how you're gonna fund it that way.
Yeah.
So we have the ability, like Jeff is saying, to be able to, change those assumptions, how you're funding it versus, the tables.
Right, I'm just saying both of those decisions should be board decisions.
They should,
Instead of trying to put them in the ordinance, stick them in the ordinance.
But we're kind of mandated with the table with the Florida retirement system,
For
but, with-
funding purposes, we're required to use their mortality.
yes.
Yes.
Yes, but we can determine how we want, what method that we want to fund it. If we want entry age or level,
Yeah.
so,
Yes.
okay.
So,
Yes. So I agree with Jeff's comments, and I can certainly go. I mean, so we're still going to have to revise the ordinance just to remove kind of the language that I mentioned, which is really not what we're doing. But we can revise the language to provide something to the effect what Jeff was saying, which is really just allowing the board the discretion to make that change based on, obviously the actuaries or the plan actuaries' recommendations at the time, so that we don't have to keep going back to the well and changing it every couple of years based on whatever the new table is that's being used. So I absolutely agree with that suggestion, and I can work with Jeff to kind of get language that he feels comfortable with, and bring that back to the board, or we can leave it, I can provide a draft, and if anybody has any issues with it, we can look at it at the next meeting, or we can go ahead and propose it to Palmer, to the city attorney, to take a look and pass it on to the commission.
yeah, I think you should go ahead and talk to Jeff and try to come up with, I guess, what I'd call a generic ordinance amendment that delegates that issue to the board for decision or action each year, or however you want to do it.
Yeah, I agree. I will do that. I guess just in terms of process, is the board comfortable? Do you want me to, once it's kind of finalized, do you want me to send it to, obviously Sherry's going to be aware and she's going to be involved, but do you want me to send it? Does the board want to have the chairman maybe kind of have the last say before it goes to the city, or are you guys comfortable with kind of the discussion now, and you don't really need to see the final before it goes to the city?
We can delegate it to the chairman for approval.
It's fine with me. That's
I don't,
okay.
I think that's fine. Just circulate it to everybody.
Yeah, make sure you circulate it, and any comments that be made, make it to Sherry, because we
Right.
can't talk to each other. So make it to Sherry, and if there's something that
Right.
you do not like in it.
And this won't have any actuarial impact. Again, this is not changing any funding or benefits really. This is just kind of memorializing or addressing how these calculations are to be performed. So again, it won't have any fiscal impact on the plan, but obviously it's something that we just need to update.
Okay.
But I'll prepare that. I'll get with Jeff. We'll finalize kind of the language, and then I'll circulate it to Sherry. She can circulate it to the trustees, and then if anybody has any comments or issues, we can kind of work those out before submitting it over to Palmer and the city attorney's office for hopefully enactment by the commission.
Mr. Chairman,
Go, yes, sir.
excuse me. Is this going over then as a board recommendation to, that the city commission adopt this revised ordinance?
I would think.
I would think, so we'd have to have a motion or proposed.
I personally would rather see something in black and white on what we're voting for. I mean, I kind of sort of understand everything that he's saying, but
You'd prefer to deal with it at the next meeting
yes, sir.
in May. I don't have any problem with that unless Pedro or Jeff think that we're,
This is not a timing issue, is it, Pedro?
No, I mean I spoke, and Sherry can also step in, but we discussed it, and really I don't believe that I think we're okay. I don't think it's anything that needs to be done immediately. I believe that I don't think there'd be a problem with getting this done and then having you guys look at it at your next meeting next month. Sherry, was that your understanding from our conversation that it would be okay to we didn't have to do this right now?
Well, what he was concerned with though, Pedro, is the 2016 report was approved by the state in December of 2019. That's where that 3-year period came. So What he was concerned with is if we change any calculations for benefits going to any joint pensioners, how would the state look at that? If they approve that report in December, we have continued to work as normal, doing calculations to joint pensioners, things like that. And that's what he was asking you, would the state be okay in giving us time to allow for those new tables to be processed so that we can change calculations? So from December to whenever this is approved, all the people that we've calculated, and retirees, drop entry people, anything like that, would those be grandfathered into the old way, and would we get in any trouble with the state because we used the old way because we didn't have the new rates yet? Jeff is actually working on, if you remember when he was here, he was talking about the new FRS mortality tables.
Yep.
That's what they're working on. That's the whole reason of this. So we have not been given those rates yet to input into the system for our calculations for joint pensioners. So that's why all
Still
this
using
is.
the old information,
Yes, sir.
which it sounds like under the old ordinance definition, we probably should be using.
Exactly, but now he's concerned since that state approved our 2016 report. They're 3 years behind, but we had 3 years to do the FRS new mortality tables. He wanted to make sure with Pedro that we wouldn't get in trouble with the state. And that's what Pedro's saying, that they have to give us time to work with the new calculations because we're getting new tables and new factors.
So, right, and that's, so the state, we're not gonna have any problem with the state, and Jeff is comfortable from his perspective. My thought was that it doesn't make any sense to have Jeff do it one way. We're paying Jeff to do it one way, and then we're gonna have him, as soon as the ordinance is passed or enacted, we're gonna have him go back and change it, change those exact calculations. And the difference, and this is another question that I asked Jeff, the difference between the two forms he believes is likely to be negligible. So you know, it's not as though it's going to be some sort of a huge disparity in the actual benefit calculation differences. I think he gave me something, Sherry, and I forget the exact percentage, but it was something to the effect that he thought it would be, you know, less than 0.005 or 0.006, something like that of a
It's real
difference.
small.
So for all those reasons, I think it's okay to go ahead and take the time, pass the ordinance, and then have Jeff do everything one time, rather than have our actuary perform the calculations and then 3 or 4 months later go back and have to revise everything and do everything again.
Because we have to update PeopleSoft, which is our computer system to calculate benefits. So how this is all going about is, we have been entering the current rates we have. Well, now there's new table rates. So we need to stop entering the old ones and start entering the new ones. And that's what brought all this up. So that's why Pedro got involved with this question, just to make sure that we wouldn't get in trouble.
So
So
summary
we'll
is,
deal with it at the next board meeting.
you're gonna write or draft a ordinance, and we're gonna look at it at the next meeting, right, Pedro?
That's correct. That's correct.
Moving on.
Okay, let's move on.
And then just one other subject while I'm on the ordinance amendments. And this kind of bleeds into one of my one of the other issues or topics that I have on the agenda, and that's the Secure Act. And I know this we haven't met, but you should have a copy of the special report we issued. This was something that was issued back signed by President Trump back in December, and it's the Setting Every Community Up for Retirement Enhancement Act. I think I got the acronym correctly. And really, excuse me, what this does, it creates, it allows for really enhanced savings retirement, and it does so in several ways. Really, it for the most part, it makes a lot of changes to defined contribution plans, but it does make one at least significant or notable change to defined benefit plans, in that it increases the required minimum distribution age. So this is the age for a qualified plan, right? We're a tax qualified plan, meaning that we don't pay taxes, right? So for qualified plans, there was a requirement that by age 70 and a half, people had to begin taking their distribution, essentially receiving the money as income, and then obviously, paying their taxes to the government on those monies that they receive. So you can only defer taxes for so long before Uncle Sam gets his cut. So previously, this was age 70 and a half. As of the effective January 1st of this year, of 2020, that age, that required minimum distribution age, was increased to age 72. So it allows for folks to defer paying taxes. It allows for folks to put in more money into these retirement accounts, essentially for another 2 years potentially, before they're required, and obviously assuming that they're still working, before they start taking money out. So your ordinance, obviously part of your ordinance is the IRS, the Internal Revenue Code technical compliance. So we do have to go in and make a slight revision to that and provide for the new age so my thought was we could do this all at once. So the ordinance amendment that you guys will receive and discuss at your next meeting will also have that minor change in it as well.
Okay.
Who said okay?
The chairman. If it's required, it's required.
Yeah, it's a federal requirement. It's not like you have a choice.
Not a lot of options there.
There's not an option.
I mean, we can't opt out?
No.
Very good. Are you going to make comments about the CARES Act and the executive order, or is that just self-explanatory?
No, I mean, I was just going to kind of touch on it really quickly. So you guys should have a copy again, and we inundated you with special reports, and I apologize, but there was a lot going on. So the CARES Act, really it's just it's something. It's more informational for you all, and obviously I'm happy to discuss it with anybody. If you want to discuss it now, we can do that. If you want to kind of discuss it with me offline and not hold up the meeting, I'm happy to do that as well. But effectively, you guys have heard, it's a significant piece of legislation. It was enacted or passed last month at this point, and really just in an attempt to bolster the economy and really provide some sort of relief for small businesses and individuals, and try and bolster the economy while really everything was shut down. It does provide some provisions which would help in terms of from our standpoint, let's say from the pension standpoint, from the retirement standpoint. It does provide individuals with the ability to start drawing money sooner. So those, and I'm sure you guys have heard of it, those prepayment penalties where you weren't allowed to take distributions on certain things before age 55, what was before 59 and a half, and for public safety it's age 50. Those are temporarily removed, and you can make withdrawals up to a certain amount based on certain conditions. So it does provide some allowances and assistance for those who may really just need access to capital or funds or cash. But again, I don't want to take up the whole meeting. I'm sure in your other lives you potentially dealt with it, but it doesn't affect our plan directly. But I'm happy to discuss it with anybody, in kind of in more detail. And the executive order really just was something signed by the governor, and what it does, it's effective through May 9th, unless he extends it. But based on the state of emergency that was declared, he also signed the executive order removing requirements under the Sunshine Law, and providing that there needed to be a physical quorum present, and that the meeting needed to be held in a specific location with access to the public. So essentially what he did was create the ability for public agencies, for boards such as yourselves, to meet, even if we are all under quarantine and stuck at home. So previously under the Sunshine Law, we needed to have a physical quorum present in the room, that was publicly available. So now, provided we have a quorum present, everybody can attend electronically or through some form of audio-visual platform or teleconference. And we don't have to have the meeting in a specific location. We do still have to provide access, and I'm using my air quote fingers, to the public. But the way that we do that, obviously, as we're doing now, is there's certain mechanisms that we set up to allow the public, we can still see the meeting, we can still participate in the meeting, they can call in or email questions or comments, and things like that. But really, it just allows for boards to meet virtually in some capacity, while everybody is stuck at home. So but that is effective through May 9th. That's currently so through next week. But the governor obviously he's extended it already once. The likelihood is that he'll probably extend it again. But we'll certainly keep you posted.
Okay. The last thing on our list under you is TIA update requiring unclaimed property.
Yes. So this has been, and I know I spoke to Sherry about it. I know that the letters went out, and that you've been receiving, return to sender from various places based on the last address. So this is, kind of going back or circling back to what we discussed previously, and I know you guys have discussed it also. And I did speak to the unclaimed property yesterday, or last week rather, just to confirm everything. But really, from their perspective and from the statute, so for retirement accounts, it's Chapter 717 in the Florida statute. It really just, as long as there's been the dormancy period has been met, and for retirement accounts, that dormancy period begins when the member was first eligible to receive benefits or distributions. So obviously we've already covered that for the participants that we're talking about, for the inactive accounts that we've been talking about. And so we can go ahead, and this was a question that we had discussed previously, but we can, and I believe, Jeff, you mentioned to me that the city does have an unclaimed property ID number already, a UPID, I think it's called. So we can simply use the city's ID number, and it's really fairly simple in the sense that it's all it requires is it's downloading a free software. It's HR Pro software, and it really just kind of creates a spreadsheet that you can input everything. Then you log into a website and you download or upload the file, and then after that, it's just wiring instructions. You can send a physical check, or you can just arrange for a bank transfer or a bank wire of the asset. But that would be all that would be entailed. This does comply with the IRS's procedure, with the Treasury regulations for lost or participants who can't be found. So from that perspective, I believe once we kind of get all of the money or all of the accounts, the checks that have been issued that have not been cashed and have been returned to us, then we could be in a position to go ahead and start to transfer over to the state. And then, obviously that would be somewhere where the individual can go ahead and if they ever come back, they at least have access to those monies without what the board was concerned with, without just, leaving it in an account and just it getting eaten away by fees.
So Pedro, are you saying then that TIA would need to return all of that money back to the city?
I believe right. I believe what we would do is we would have TIA force the distribution to us.
Okay.
And when we looked at the documents for TIA, that was permissible.
Yes.
So TIA sent out all the checks,
Yes, sir.
Have we passed the period for,
Not yet, because they sent them on March 27th. So we have to allow them to allow for the mail, especially the way the chaos is right now, to be mailed out. Then it has to sit there in the post office for however long they sit there, and then it's gonna be returned back to them. And then they'll
when will
void
be
the
the date
checks.
at which we're done?
Well, I wanted to at least give them 60 days.
Okay.
Which would be May 27th, because that's what they told us to give them was 60 days
Okay,
for the letters and so forth to be returned.
So that return envelope's gonna go to Tia?
If, the checks will be returned to Tia, yes, sir.
so when
Actually,
will-
we received 2 of them ourselves because somehow 2 of our old employees had our address. So I wanted to check it out. So I've kept a copy of those because I'm going to keep tabs on it. And I've put incorrect address, return to sender. So I know there's 2 checks that went back to Tia myself. So we're going to see that time frame.
so sometime in June, we should have an accounting of this, about how many checks we sent out,
Yes, sir.
how many got cashed, how
Actually, I
many,
have that for you
how
now.
many came back?
We mailed out 1,599. I'm sorry, 1,559. And they sent 1,399 checks. So,
Sorry, if we sent 1,500, why did they only send out 1,300?
because some people called in.
Oh, okay.
And they took it before
Great.
that time, yeah.
So
But
they sent out 1,300 and some
99, yes,
checks,
sir.
and then sometime in June, we could kind of know
How many came
what
back?
happened.
yes, sir.
And then we talk
That's
about
what our time frame is.
doing the unclaimed property thing.
Which I think we'd have to do that spreadsheet that you had mentioned a long time ago.
Right, and
Yes, sir.
Rachel can help you with that.
Okay,
She does this every year for other stuff for the
Okay.
city, unclaimed stuff.
okay.
Is that the same software that he was referring to?
No, he was just talking about doing a spreadsheet so we can keep track of each person's individual. Then we could probably convert it to that program.
Oh, okay, I got you.
I was gonna
Unless,
say, we already have somebody at the city who does unclaimed property for not this, but for other stuff. So that happens every year. I assume we have the software and the ID and the capability of doing it, because we do it regularly. So Sherry can talk to Rachel Taylor, who does this every year, and we can figure out how to do it once we get through to June.
Yeah, and the gentleman from Unclaimed Property, you know, he's been very helpful. His name is Alden Asher. I'm going to pass on his information, obviously, to Sherry, in case she needs anything. But that's exactly right, Jeff. He said that, you know, obviously the city has done this before, so if we use the city's UPID number, then it's already, you know, it's already kind of set up on their end for receipt and everything like that. So a lot of the it's a much easier process.
oh, it sounds so good to get those off the books.
Okay. Do you have any other questions for Pedro?
How's the family, Pedro?
Everybody's good, you know, we're holding up. We quickly learned that we made the right decision in not becoming school teachers. But I think, you know, everybody's holding up. Luckily, we're all healthy, so that's the important thing. And it could be a lot worse. It could be in New York or one of these other places where we can't really leave our little apartment. So it's not too bad. Thank you for asking them.
Good to hear.
Thank you very much, Pedro.
Thank you, Pedro.
Be safe.
You're welcome, guys. Obviously, let me know if you need anything. And if you guys don't mind, can I just stay on for a little bit longer?
Sure.
We have to charge you our attorney rate, though, per hour.
Right. That's right. This I won't be charged back. How about that?
There you go. Okay. We're going to flip back to Jacob.
Is hear me okay?
No, we cannot. I don't,
No, no,
Mic
the
on?
microphone's on.
The mic on there?
let me make sure that you're on the,
Just get closer, maybe it's on, is it on?
it didn't sound like it when he talked.
Hello, hello.
No, it's
No,
not.
it's not on.
Sound like it's not on. Let me ask him how to.
Just kick Tyler out.
We can do that.
Yeah, if you can just go over there, that'll work.
Yeah, speak up for us seniors too.
Yeah, I forgot to put my hearing aids in this morning.
Huh?
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 Okay. He said he could hear him on that. We just couldn't. He said he didn't know why we couldn't. He's on the phone. Okay, he's sitting over there
Do you
now.
prefer me to sit here?
Okay.
There
Is
you
that
go.
better?
Sounds good.
Okay, bye.
All right, well, good morning. First of all, this is the exciting part of the agenda, the record-keeping RFP. Chairman Hart was very anxious to get to that. I appreciate the excitement there. There's a lot of materials in front of you. Once you get past the 2 flash reports, everything else relates to the record-keeping RFP. And so a couple of things just to kind of level set where we're at and kind of framework from a calendar decision-making perspective, and then turn it over to Chairman Hart and get questions or have some discussion. So the RFP was sent out the beginning of March. We allowed vendors a month to complete the information, at a period of time where they could submit questions and ask us, ask clarifying questions regarding the opportunity. In the RFP, we outlined a target transition date of November 30th. So what that means, and I bring that up just because a lot has happened since March 2nd when we sent this out. What that really means is if the committee made a decision and had contracts and things really buttoned up by mid-August, that November 30th deadline would be no problem for a new provider. So we're not under a crunch at this moment to rush something through. We don't have to make a final decision today to hurry and get to some deadline. And TIA's contract isn't up until end of first quarter 2021. So we actually built in some cushion there as well. So we've got a great head start. So just wanted to kind of get that out there as far as kind of easing concerns as far as what we must do or not do today and at subsequent meetings. So with that being said, we received in front of you, there's a large book called DC Plans Record Keeping RFP. And then there's a second book behind it, which is a smaller version that just contains the pricing and the references. This represents the 6 vendors who submitted proposals, qualified proposals. We had some vendors decline to bid, but this represents the responses of the 6 vendors.
This is everybody that responded?
This is everybody that responded.
Well, you said qualified, though.
That qualified, right? We had one that was disqualified, and then we had 3 vendors who declined to bid upon receipt. So a couple different directions we can go. I thought maybe first just start with perhaps questions or comments from anyone who, in your reviewing the materials, if you had any questions about the materials, about the process.
One question, the proposals themselves, those were not forwarded to us?
That's this document. So this is their proposals.
Well, this is
It's all inside here.
this is your summary of their proposal.
So what we've done is,
There's no summary in this. It's quite lengthy.
Well, they're not they're not the booklets that they submitted.
it's their actual, so what we did is we actually send out
Copied over
we send out an Excel spreadsheet now instead
Okay, and
of,
populated.
yes,
Fine.
yep.
That's what I needed to understand.
Yeah, good,
Thank you.
good point, from where we were 8 years
editorial.
ago. Yeah, so instead of us taking it from the Word document and summarizing it in Excel, we just had them all fill it out in Excel. So this represents all their proposals, all the sections of the RFP. If there's any other questions or comments.
What is our purpose today?
So today, I think first and foremost was see if anybody had questions or comments about just from an initial review, and then would get an idea of where we want to go from here, right? So from your consultant's perspective, we've reviewed all the materials. We certainly have done scoring and have recommendations of our own. So that's one path we could go. There are scoring sheets in everyone's packets. Those were also emailed out, so we could entertain some questions, comments, further direction, and then everyone can go back and score individually. So there's a few different avenues we can go from here. I think that's
Did we
part of the
schedule a
discussion.
time to get together and discuss?
We actually have that. This was just like when I sent all that out to you, it was so you may have any questions for Jacob on
I'll
these
be honest, I
things.
haven't looked through it yet.
And then we have on the actual sheet, on the dates, Jeff, we were going to meet with, I thought you guys had said too at the last meeting, you kind of, the board wanted to make a decision on shortlisting. And then we were going to meet with the panels that we have formed so that you guys can decide on who you want to come back and interview. And that is actually on the dates of May 20th through the 22nd is when we were going to meet with everyone on the
We're gonna
panel.
grade these and decide to help us shortlist
Yes, sir.
to what? Do we know what number have we decided?
That's up to you guys.
Okay.
Yes, sir.
I'll recommend, what I would think of is 3.
You what?
I would say whittle it down to 3.
Oh, yeah, no more than 3, for sure.
That's what I would suggest, if
That's my
that's
thought.
okay with everybody else.
So you want the entire board to score these 6?
Yes, sir.
And 10 is a better score than 1. It says 1 to 10, but 10 being the one that gets the most points wins.
Right.
Correct.
Okay.
And this was in your email attachments to kind of help you just have a little bit
So
better.
when do
sheet.
we, as the board, need to get that back to you all? Because the May 20th to 22nd was to get together and discuss who should the finalists be?
Yes. So if you haven't had a chance to look at it, then maybe kind of review and just let me know your thoughts. And then we'll let Jacob know so that he can get a report together for the short listing. And then we'll get the panel all together. Because everybody is on board so far with the dates that we have. We haven't extended those
But the
dates.
first meeting is to decide on the short list.
Correct.
So you need to see our rankings by when? Before that meeting?
Anytime before that meeting.
Okay.
And then we can summarize.
We need it, if you don't give us a deadline, you're not gonna get anything.
May 20th through the 22nd.
May 20th?
Those were
No,
the
no,
dates
no.
we wanted to get with the.
Let's have them all back by May 15th. Is that too little time? That's 3 weeks?
That's whatever.
May 15th to Sherry.
So the shortlisting would be pretty much automatic. If we decide we're gonna shortlist it at 3, the scoring shortlist them right there. The best 3 scores.
Well, wait a minute. All right, if, we've got to give the vendors time, if we would actually be interviewing them, correct? On the 20th, 21st, 22nd, Sherry?
No, that is for us to meet with the
Decide.
panel.
The panel, okay.
To get
okay.
together and discuss.
Okay, no
Make sure
problem.
we
David,
pick
correct
the
me
right
if I'm wrong,
3.
now, maybe I'm speaking out of turn as well. But wasn't that what we were going to do, was to shortlist?
I think we were gonna interview them on the May 28th meeting.
Right,
Okay.
So, I mean, we have to give them more than a week's notice.
Right.
Right.
Especially now.
Yeah.
How much
time- how
much time
Well, that's what I'm saying. We got to make sure we're lining up so we give the vendors notice that we've got time to do things.
I think we were maybe hoping to have a conversation with Tyler today, but obviously I don't think everybody's had enough time to review.
Yeah.
So we're not gonna be able to do that, so maybe we can schedule a special meeting maybe a couple weeks from now.
that's why the 15th wasn't a bad idea. I was thinking if you guys want to do that, we can all,
I don't know if y'all would be open to a virtual meeting for that one, but, you know, whatever works for you all.
Either way, so what you're talking about is we should go back, we should score, and we should have a special meeting in about a couple weeks. So that we can all discuss to make sure we think we've all picked the right, that collectively we've picked the right 3.
Correct. And what we did, for those who were involved, the last time we did this, we collected all the individual scores and then we put it in a summary. And so then that kind of, you got the output of the committee, right? So we were able to see, well, is everybody kind of on the same page? And then we had discussions from that point. To Chris's question about how long do they need, typically vendors, we give them about 2 weeks to prepare, from the time we notify them of making finalists to get their teams ready, get materials ready.
If we gave you our scoring within a couple weeks and met within a couple weeks, that would give us plenty of time to notify them for interviews on the 28th.
Sure.
Okay.
The only potential downside is just the current situation, right? So part of that finals is meeting, the relationship manager that's going to be kind of the primary contact for the city, meeting the educators who are the primary contacts for the employees, and whether or not we can have them travel or do those interviews virtually. I think that's where we have, I think, the benefit of the calendar, where we're not up against a deadline to have to make a decision and make a transition quickly. So we could do virtual interviews at the end of May and then potentially have them come in person at some point. Maybe the travel will be a little lighter, restrictions will be lighter, over the summer months. But I would hesitate to, just because I've always seen them in person. I've never done a virtual meeting. I think there's a great benefit to meeting and discussing with those people face to face. So that's just one thing to keep in mind. We can do interviews at the end of May, but they may or may not be in person, and so we just have to weigh that out.
Well, I actually have a GoToLive license now that Communications has given me, so I can invite you guys on the meeting, and all you have to do from home, I don't know if everyone has a camera and a microphone on your computers, but you can just click on that link and you go straight into the meeting. So,
We'll have sunshine law issues if we meet.
well, that's what the commission's been doing. All of our commission meetings have been on
That
GoToLive
expires
meetings.
on the 9th unless the governor extends it. That's what I was hearing from Pedro.
That's what I
Pedro,
heard from Pedro.
are you still there?
Got the 10-second delay.
I'm sure the city staff took care of all the city commissioners at home too, and got it all taken care of. I'm not,
Speak to that.
I'm still here, Sheriff.
Pedro, what about the sunshine rules on the end of May? Are we allowed to still have a GoToLive meeting?
So that's the question, where, the answer is I don't know yet.
Okay.
It depends if the governor extends the executive order or not. So the executive order is removing the requirements that I mentioned earlier. That is tied to the state of emergency executive order that he issued at the beginning of March, more or less. So as he's been extending that initial executive order, so too does the sunshine law exemption order, if you will. So we'll know, obviously I'll let you know, but as of now, it's set to expire May 9th. But I think, at least from every indication that I've received, he's going to be extending that. So the likelihood is that it'll probably be okay at the end of May, but as of now, we just don't know.
So then that means the May 15th meeting, we'd have to meet in person, because that's after this executive order unless it's extended.
That's right. So effectively, you would have to have at least, a quorum physically present in the room. Everybody else, the vendors, service providers, finalists, for this presentation, all those, they can all still obviously meet remotely. They don't have to be in the room, but you're going to have a physical quorum in the room, assuming that the governor doesn't extend the order.
Which is 4. So 4 of you.
Which for you is
In the room.
Which for you is 4.
and I don't, if this is the PA system or the speaker we're gonna have for the presentations, I don't get all that. Maybe, I'm sure my hearing is not what it should be, but that's not super clear to me if they don't really speak up. I'm worried about it. Can we decide on how we're gonna handle that letter? We decide what 3, and can we decide on,
How later? Sure.
let's do that.
And I could,
Let's just move forward and go ahead and get these rankings back to you. Are you gonna send out an email and we can write our scores on the email and
I actually sent an email that contained the scoring sheet.
you did win?
I don't have my.
April 21st,
There you go.
April 21st, Gene, it went out.
April 21st, everybody got the email with the
Okay.
score sheets, all their
Send it again to
reports.
me, because
Yes,
I've
sir.
been out of town for a couple of weeks, so if that's okay?
Yes, sir.
And is it the same sheet, or you just have the
same.
names but not all the verbiage, right?
It's exactly like that.
it's that exact
Exactly
same
like
sheet.
this?
Yes, sir.
And we can fill it out?
Yes, sir.
And I send it back to you
Yes, sir.
by the 15th?
Yes, sir.
Right. Maybe a little before so that I can send it to them so they can kind of.
Oh, okay.
Decide on a date.
We'll do it this afternoon, that's not a problem. See
I
this thing?
think maybe May 8th.
Maybe.
A week ahead of time.
Is that enough time, May 8th? Would that be enough time?
It's like a week and a half.
And what?
May 8th.
A week from Friday, a week from this Friday.
A week from
To
Friday.
have your scores in.
Okay.
And then we're gonna meet,
You're retired, what are you
and then we're
gonna
gonna
do?
meet when?
Well, we're looking at May 15th
That's fine.
to review it, but I don't know yet if it's going to be in person or if we're going to be able to do the go-to live without the executive order being
Let's
extended.
plan on doing it in person, and
Okay.
if you can't,
Plan on doing it this way, it seems to be working, and then.
Okay.
Yeah.
All right, so I need to
Where are
reserve
we-
this
where
for
are our dates and deadlines now?
Sir?
May 8th, you need to have your stuff in.
And then we're
And
gonna
the
meet on
15th
about the 15th.
Don't get any closer, the quality of the review is gonna diminish greatly as you tighten up the dates.
Just choose the one I want, that's all that matters.
Would you like me to send that email back out to every one of you?
With a reminder on the dates.
Okay.
Sure. And then you're gonna schedule a meeting for on or about the 15th.
Yes, sir.
And then it sounds like the preference is for in-person interviews.
Yes,
Yes.
Well,
and we'll decide that later, but
So we'll
yes.
have to figure out, we'll know more in a couple weeks whether or
you're
not.
gonna have-
Yeah, we'll know something about
we'll
it.
decide that when we meet on the
Yeah.
15th.
And if it's not realistic,
and
if it's not realistic, we'll just delay it at that point.
Move it into June, and
Right, yeah, we have plenty of
So-
time.
Tyler,
Having,
can you explain to them maybe how you could, and that's, it's only if you want to, but there are ways that you can go into that scoring sheet and complete it and save it and send me the saved version so you don't have to print it out.
Mine's just a PDF, so I'd have to print it, fill it out, scan it, send it back.
Okay, let me send, can you open that up for me, Tyler, that I can send that out so they can write on it?
The
The scoring
PDF
sheet.
is, the PDF is unlocked, are you talking about,
He can't go into it.
Well, I can't edit it. I'm right here on it and I can't edit it.
He
does it
pulled it
side
out.
editable?
Huh?
Yeah.
I don't have Adobe Pro. I just got like
Oh,
Adobe
right,
Reader.
So, I mean, I can send, do you want the Excel sheet, is that what?
Yes,
Okay,
and that way
yes.
they can, you guys can just
Yeah.
fill it out on your
send us the
computers.
Excel sheet, then we can
Yes.
fill it in and send
Yes.
it back to you.
Sure.
Yeah.
Right,
Okay.
Is that okay with everybody?
yes.
Sure.
Ron?
I'm sitting here listening, and I got a question. I'm sitting here looking at COLAR and the Employees Association. How are they involved in this process?
not.
They're part of the panel.
part
When
of the
you
panel.
guys,
Okay, well, that.
They're also getting
What's
all
the
this
panel
stuff.
doing? It sounds to me like the board is doing everything, and I'm lost here.
Ron, the idea is that you all narrow it down to the 3 finalists, and then the panel all gets together and talks about the 3.
Who's gonna do the interviews?
I think it was the full panel.
the full panel
The
will be
idea
there.
was that
The
everybody,
full panel or the full board?
The panel too and the board.
everybody would be in the room.
The board has the ultimate decision, but the panel wanted to have input on
I
this.
just wanna make real sure we're not leaving out COLAR and the
No,
Employees
sir.
Association.
No, sir.
If that's okay with
Yeah,
you,
it feels like we are.
does that work? Would they narrow it down? to
Rob's
3,
been here every
And then
meeting,
everybody's
so.
in the room
I
with the 3?
know he's here.
Yes, sir.
Everybody hears the interviews, and then everybody is able to discuss the interviews of those 3 people.
Like I say, I just want to make sure we're not leaving them out in this process, because to me, it sounds like a board process all the way through. And I'll holler if
Yes,
it
sir.
goes that way.
Yes, sir. They're all,
They said
we're,
it wasn't gonna be. I believe.
Okay.
We talked about that earlier.
that's Jeff Michelle that just left. He's also on the panel.
I know.
So that's why I was wanting him to stay here, but he had an appointment, so he had to run out. But he'll ask us once he comes back.
You know me well enough to know that I want to make sure they have their input in this process.
Yes, sir.
So
That it?
we've got the full proposals in the thick package.
Yep.
We've got the scorekeeping matrix, which you're gonna give us a Excel version of that we can fill in. You've also provided us with the fee matrix. And I was wondering if somebody could remind me what the current fees are?
Current fees are 13 basis points for the 457 and 401A,
Right,
and the FICA is 25 per head.
Well, that's only after March of 2021.
Yeah, what is that you
They're
have?
not paying, the FICA's not paying
it was
right now.
tucked in one of the things, it's the fees.
Remember, that's
on
what all this
matrix
is
thing.
about.
Oh,
is
it
they
is
wanna
tucked
start
in there.
charging those
It
fees.
was in the,
No, all this is about is because Tia's, the 13 basis points is not gonna be, they're gonna raise that rate.
So,
And they're gonna start charging.
right,
FICA.
so my only point was that,
Gotcha.
look, just as a quick
Compare.
flush look at this, that some of our proposals are about where Tia was gonna be, and some are higher, but they're certainly not low.
Correct,
Okay.
correct.
And just my note, I really like to negotiate them a little bit further down, because we're already back up to 110 million, and
Do we think there's room in these fees?
I mean,
that, whether or not there's wiggle room for negotiation.
Okay.
Yeah, I mean, the,
Okay, DC, okay.
the main piece of it that, you know, which was Tia's issue as far as why they're exiting the government business, and, you know, what we've discussed throughout the years is this use of proprietary product. So,
That was gonna be my next question.
yeah, so Tia's current fee of 13 basis points, they came to us at the end of last year and said, you know, we're getting essentially out of the government business, not a lot of proprietary services and products that we can offer, not a lot of take-up rate in the government space as much as there was in the higher ed space where they're used to. And so they said, you know, we'd be happy to give you a new proposal, but if you're not going to let us use these various proprietary products, that new fee is going to be multiples higher than what it is today, which is kind of what led to this discussion, because that contract was up. What you've seen, what you've pointed out there, is several of the vendors were right in line with that 13. It was made known in the bidders' questions, right? Some of the bidders asked, what is your current fee? So they knew that TIA was currently at 13, and they bid 13. So 2 were at 13, 1 was at 16, and then a couple others were a little bit higher than that. And then there was one substantial outlier. I think there's probably a little wiggle room still on the open architecture side, not much, because that's probably where the market is.
But the other thing too, and I'm sorry to interrupt you, is they're also charging $24 for each FICA account. So when you look at those fees, they are listing the FICA account separate already with the 13 basis points, so, or 13.13 fee.
Why do we want to get
Right.
the unclaimed property business sooner rather than later?
Well, we won't bring those over to the new vendor anyway. We'll just leave those at TIA and we'll bring those over to us. So that's just my thought anyway, because TIA, remember, they weren't charging us on the FICA accounts, theirs on those. That's why we did the forced distribution, because they wanted to start charging them.
Right, as part of their contract negotiation a year or so ago, they
Yeah.
moved from 15 basis points on all assets to 13 on the 457 401A and a $25 per head on the FICA. And so it was essentially a fee increase, but they were trying to level set what they administratively were.
Plus, our income, or the increase in that balance has gone up a lot since that discussion. So now these new companies are seeing what TIA is offering, but our balance is way higher and the contributions are still coming in. And like I said, we're already back at 110 million. And so it's like they saw what was going on currently, and that's what they offered us. So that's just, my opinion. I'm sorry.
And presumably these 6 are qualifying because they agreed to the open architecture and they agreed to not offer proprietary products and agreed to that they're people who are doing education,
Are salaried individuals.
are salaried, and they don't make anything based on what they recommend. And yet in a number of these proposals, there was clearly a little hedging where they're saying, oh, but by the way, if you were willing to take our proprietary stuff, we would discount
Right.
the fee here, here, and here, which leads, and maybe this will be a discussion for in a couple weeks, which leads me to worry, given that they do have proprietary products and they clearly would love to offer the proprietary products, about the purity of the advice.
But look
I
in your.
totally agree with you, Jeff. I think that needs to be taken into account when you guys look at these.
If you look in the book that Tyler and them did, there's a scoring of the fees. He did that second book. If you look in that loose paper, it has the fees.
Yeah, no,
Empower's our current stable value fund, and look at the fee they're quoting us, 0.273. I'm just saying.
Yeah. But what I said, Gene, was that I totally agree with Jeff that people who put that, we specifically said in the RFP, no proprietary products, and then they still kind of put it in there. I think that needs to be taken into account when you guys evaluate these proposals and score them. Absolutely.
because it just feels like, yeah.
I agree.
Well, for better or worse, I think they all have done that in some way. So it's partly a nature of the business these days. I think the record-keeping side has been commoditized, and so they're, looking, and with fee transparency and moving away from revenue share, and I think all of these components have kind of driven the fee down, and so now,
It's just hard to milk your clients like
Right.
it used to be.
so there's a effort to try to recoup some of that money. But to your point, the RFPs, the fees, everything is pure open architecture, so we can make a decision, apples to apples, without any proprietary products or services. We do have information in there related to what they have, but that's, not part of, or not for the main part of the discussion.
It's something to keep in mind.
Right.
I have a question, because, we do use the Vanguard funds, for the target-based. And usually Vanguard has very low fees. Did they bid on?
No, they don't participate in the government market.
They don't?
So they're primarily just ERISA plans, corporate plans. So the only vendor that I would say, or the two vendors that are in the government space that declined to bid were Nationwide and AIG, formerly known as VALIC. So both of them declined to bid, and reasoning was just too restrictive. They wanted availability of some proprietary, the ability to offer proprietary products and services, and they just felt it was too limiting, so they declined to bid. But some of your others, to your point, Tory, Vanguard, Fidelity, a lot of record keepers out there that do it, they just don't, they've chosen not to participate in the government markets, 457, 401As.
This is Pedro. Can I just ask a question, and you guys may know the answer? What was the issue with the firm that you mentioned had been disqualified?
Rate.
They didn't meet the minimum qualifications, so we had a sheet at the beginning of the RFP, and it said there were certain qualifications, like you had to have at least 1 million participants, $10 billion in
I got you.
DC assets, things like that.
Okay, no, that's fine. The lawyer side of me initially thought something bad had happened, but okay, I appreciate it.
No problem.
Any more questions on that? So we're going to be, on the 8th, we're going to get our scoring sheet to Sherry.
Yes, sir.
We're going to meet on or about the 15th. That's not going to be the panel? Is the panel going to be part of that? Panel will be a part of that one? The 15th meeting?
The 15th was when you had to determine the short list. The 20th through the 22nd is when everybody was meeting, so that all of you guys, and that's my understanding now, Tyler and Jacob, you tell me if it's different. That's when the whole panel was gonna meet, and that's the dates that I've given to Kolar, the fire, the police boards, between the 20th and the 22nd to meet, so you guys can iron out whatever you wanna do for the shortlisting people. And there's 3. I think you just said there was be 3.
Just wondering why we're having 2 separate meetings, since the idea on the 15th is to determine the short list, and then the meetings on the 20th to the 22nd are to discuss the short list?
Well, they have individual, like, I know Jeff Michelle wants to make sure that the companies that we end up choosing can do certain things. So,
Right, but shouldn't
We
we
can
know that
combine
before
them
we
if you
determine
want.
the short list on the 15th? I'm wondering why we don't collapse these into one meeting.
want to do that?
Yeah.
But-
Well, I think originally, the original timeline for the 20th through the 22nd was for interviews, right? So
Okay.
I don't think we're gonna make that.
No.
Well, then I would just encourage
so
that
then-
we get everybody in the
Yeah.
meeting on the 15th, including the other
Right.
members
Yeah.
of the committee, to help us figure out what the short list should be.
Sure, that's fine.
So if they have concerns or do like a particular firm or hate a particular firm, we know before we decide on a short list and start inviting people to travel to Lakeland.
Yep.
Okay.
Would you like us to reach out to the 6 bidders to just verify their current travel situations? For the end of May, beginning of June, if we have finalists, would you be able to travel based on your corporate policies or something, just to kind of get a framework?
But with all the changes, are they even going to know yet? That's the hard
Well,
part.
They might not, but they might.
We can just reach out and then tell them to update us over the, next few weeks as that changes, just so we know. I mean, if everybody's, if there's firms that are saying, we can't travel until July already, well, at least we'll know that we've got
This
a,
is for the May 26th. We're going to have them come into the May 26th meeting.
Right.
I just want to make sure I'm clarifying the date for you.
is that, I don't have the dates in
I think
front
it
of
was,
me.
I think
That's
it's,
our next-
I think it's 28th, not the 26th.
Oh.
May 28th.
Oh,
Yeah,
So that's the target date. Okay.
Yeah, I think the idea was to have them, come in, originally the 20th through the 22nd, somewhere in there. We're not gonna make that, so I guess I'm looking in direction from you all. Do you want to just have an extra long board meeting on the 28th and have them all interview that day? I mean, it's probably gonna be,
It's a half a day. if you
that's
have
a
to
half,
final.
that's a half day meeting.
Meeting's the 26th.
Because we're not gonna meet again until July 28th, I think. So,
I think we can just.
So we either need to do a long meeting on the 28th or have
Our meeting's the
special meeting.
26th. I'm looking on my calendar. Our next board
26th.
is the 26th. It's a
that's what I have on the
Tuesday.
agenda. That's why I was like,
oh,
my
sorry,
God, did I
you're right.
typo?
I was looking, I had April up, sorry.
Yeah, we should have an extra long meeting and do interviews on the 26th.
Okay, so we're
And we
gonna
have our
meet on the
normal board meeting.
15th to, everybody, and I'm gonna get the panel on board, and then we're going to have the interviews at the 26th meeting. Okay, sounds good.
Is that gonna give them enough time? If we're meeting on the 15th and then having them travel 11 days later?
It's tight, but they'll do it. We try to give them 2 weeks, but I think they'll probably be fine.
I think we'll also reach out ahead of time right now and just say, look, there's gonna be a
Meeting
tight,
on the 26th.
there's gonna be a tight turnaround on this. We're shortlisting. Finalists we're gonna ask them to come in on the 26th. Let us know if that's a problem.
Yeah.
Save the date.
Right.
Jerry, who's on the panel other than the trustees up here?
We have Kolar on the panel, we have a fire representative, a police representative, a union representative, and Jeff Michelle is coming for the employee association.
So that's four people, that's 10, that's 11 altogether.
Five,
Five.
and then
5,
7 of you.
5 and 7, that's 12.
Well,
Gonna be interesting interviews.
And we got a committee that can do some of this work?
you guys chose the panel, you told me what
Move
to put
along,
on
Mr.
it.
Chairman, I'm getting ill.
Okay.
Just to review, Sherry, you're gonna send out an email, but
You can
tours
miss
on
that
the
week.
8th, meet on the 15th,
Yes.
and then interview on the 26th when we have a regular board meeting.
Yes, and all of that will depend upon me reserving this chamber room on the 15th, because I have to make sure that it's not already taken. Because we have to have a big room.
Just throw your weight around, muscle them out.
I'm gonna throw
Okay.
your weights around.
So we have that set up for the 8th and then the 5th.
It's a lot of
Are
work.
we meeting on the 15th? That's when the panel's meeting?
Yes, so your homework is due by the 8th. We meet on the 15th.
Can
And
do
I
the
will
homework
resend
on
those
that?
emails out today, so everybody will have the email sent out with an open spreadsheet for the scoring, so you can actually just write it in there, you just resave it to your computer and send it back to me completed. That way you don't have to print it.
Well, I want to go back to what Ron was saying. Because we're meeting on the 15th, why can't we send out this information to the other 5 people on the panel and get their scores too? Because we're inviting them on the 15th
Yeah,
to
that's
come.
why.
Okay. Well, I wasn't hearing that. Were you hearing?
Oh, okay.
No, what I'm hearing is that we're gonna have 12 people interviewing 3 firms
Yes.
on the 28th, and I don't see how that's gonna work. I will not be here. I will not come to that. I'm sorry. That's overkill in my book.
And that means we're gonna have 11 people interviewing.
That's
Or
right.
maybe we should have the panel submit questions prior to them, and then you guys kind of read their questions that they may have. I know Jeff has a lot of good ideas, and he wants to make sure that they can do, and Jeff's back now, so.
Well, what would you suggest, Ron, as an alternative?
That's all right.
Huh?
That's all right. I have, for 17 years now, made a point that I want to make sure, especially on this, it's more important to me on this,
Yes,
that
yes.
Kolar, the fire department, the police department, that their input is more important than this board's input, just to be frank with you. It's their money we're talking about.
Right.
we're the fiduciaries on it, I agree with that, but 7 of us and 5 of them, that's kind of like the utility committee for the city. The city commission's gonna get what it wants, and I got a problem with that, I won't be involved in it. But that's okay, there's plenty of people here to do the interviews.
You can't.
To me, it would make much more sense to have them and 2 or 3 of us involved in that process and let them make a recommendation back. That's more, to me, that works more the way it should for this one, because it's their money, it's not us. I want their input to have at least as much weight as this board's input. But again, that's just me. But that's consistent with, if you think about it, those of you who have been on the board with me, it's consistent with how I was in 2009 when we hired Tia. And it's consistent now. So
Because back then, we had the investment committee do it,
back then, we had the
Along
investment
with-
committee do it, yes.
along with some other reps.
Ron, if I may, just real quick, I mean, I think those are great thoughts, but ultimately, you as the board are charged with voting. You know, they're not gonna have a vote, so,
I agree.
That's what he's saying.
I mean, but,
That's what he's saying,
Yeah.
that they should have the position of recommending to us, because
and
we're
that's,
not investing their money. We're not recommending that how each individual, like these folks will be doing.
and that's fine, but what I'm saying is you're the one that actually has the vote, though, so you have to take the recommendation from them and vote
Right.
on their behalf, so you might as well be here to vote on their behalf, even if they have the bigger voice in the room. You know what I mean?
He-
It's not like you're outnumbering them
Ron
7 to
wasn't
5
saying
or
he wasn't
something.
gonna be here. Everybody could be here. It's a public meeting. He's just saying, are 12 people gonna vote?
No, I said I wasn't gonna be here.
Are 11 people gonna vote?
No, it's gonna be 7 people that vote, because you're the ones charged with the responsibility for voting.
Who
Now,
actually votes on the 15th?
you do.
The panel.
No, you as the board. The panel is there for the discussion, for input,
Scoring,
for scoring, we can have all those things, but you are the ones that actually vote, because you're the entity that votes.
So,
It
Jesse,
has to
be in charge.
should we reverse that cycle and have
It has to be
the
4
panel
people.
folks recommend the 3 to us?
Hang on, before we go any farther, Jeff's here. How do y'all feel about this process?
Well, I think we all have the same goal here, you know what I mean? And to me, a committee or us getting together is everybody putting their ideas. I mean, he may have an idea that nobody's thinking about, you know, that's what boards are for. You know, and I don't think it would be an issue, I think we're all gonna come in agreement. We may just have certain different points that we can get, and we may not be able to get them from these people that are chosen. So, you know, I think it'll work if it's just a open discussion where everybody's in agreement, because we all want the same thing. Y'all want to be successful, and we want to be successful for the fund. And, you know, I think it would work well, don't you?
Yeah, I kind of look at it as how the commission deals.
Speak up, please.
Yeah, how the commission deals with the utility committee, so to speak. They have the whole committee up there, they talk about things, they vote on things, but then the commission is the one that has the ultimate authority. So the panel we can vote on, we can vote on, if we want to, the panel on, hey, we like Prudential or whoever. You guys then, of course, have the ultimate decision on which one we go with. But certainly we want to have our input, but I think you guys need to be, or at least the investment committee needs to be there to hear everything and make the recommendation.
Jeff, my concern is to make sure that when all is said and done, the employees feel like they've been properly represented.
Correct. Yep, I understand, and I appreciate that.
My biggest concern, we had when we changed to TIA, it took an awful lot of work to make that change happen smoothly.
Well, I think a lot of the heartache was in how we handled fees, was that fees came out of the account, where before that wasn't seen. We had to communicate that really well. But once it all got settled down, I think generally employees have been fairly happy with TIA Craft.
So I mean, obviously Rob's comfortable with the process, you're comfortable with the process that's being described here?
Well, I missed a little bit of it, but I think I got the gist of it. So, yes. What's happening on the 15th?
they want to shortlist 3 firms. to interview.
Okay.
We were gonna have a meeting and all of the panel would be there and our trustees, and that's where this is, the discussion.
That's where we shortlist the three. Yeah, I'm comfortable with that.
If at any point in the process, any of y'all become uncomfortable, and police and fire are not, and the union's not here, but you need to holler.
Believe me, that won't be a problem.
I know you. I just want to make sure when all is said and done, that this board has at least y'all as representatives of the employees behind us to make this happen. I don't want to have the employees fighting us on whatever we're trying to do.
But I want to thank you, Ron, for maintaining the intent of the founding fathers of this fund. I've been doing some research. And it's for the employees. It's to reward them for their service to the community. And keeping the employees in mind that are retired, I thank you guys for doing that. I appreciate it.
Thank you.
Sharon? Tim?
Oh, yes, I'm sorry.
Comment? So you've got a scoring sheet with specific criteria that we're going to be using for shortlisting the firms. I would suggest that we have a set questions to ask, and also that we have scoring criteria for the finalist, rather than making it kind of a circus, if you will, with throwing out all kinds of questions and then randomly scoring or ranking based upon, one individual's criteria versus criteria that's spelled out as we are doing for shortlisting the firms. And it's quite common. I mean, when you shortlist and you final, you have criteria, you have the same questions that you're asking the firms versus asking some certain questions and now there's other questions. It, kind of keeps a level playing field by doing that.
Talking about in the interview process?
Yes.
Yeah, that's right on with best practice. Typically what we'll do when the short list occurs is we'll send an agenda out to all the finalists to let them know specifically, here's the topics that we're interested in hearing, here's the people we want here at the meeting. And then to your point, if there's a set list of questions that you want to ask each of them, just to reiterate or to reinforce certain messaging, we can either send that out in advance or sometimes we have it just day of and ask them the questions. So certainly agree with that methodology.
I mean, you need to be fair with all of the finalists.
Yes.
And also you need to think about two on a time, limiting it to a certain period of time too. Don't just throw out unlimited time for these.
No, usually we limit the time, and I don't remember exactly what we did, but it's like.
Yeah, I mean, typically we're 60 to 75 minutes is,
Yeah.
If you're covering 2 or 3 agenda items, and having them focus, 20 minutes or so on each one, and you have some Q&A, that's, about 60, 75 minutes is about the amount of time before you start to disengage and wait for the next one. So
It's a lot less than that, but.
So we'll keep it tight. Like I said,
It's usually about an hour, I think, is what
Yeah.
we've done in the past, I think, but it'd be, there's good to have a set of questions so you don't kind of wander all over the place.
Yeah, the other thing I was thinking, I mean, if we're going to score, we've got a scoring sheet for finalists. Should there be time in between those interviews and when those scores are submitted to give time to reflect on those firms and go back and just as you are doing for the shortlisted firms, you've got it in front of you, you've got the material, you've got some time to reflect on what was said. Maybe we should consider doing that for the finalists also.
I think what we usually do, don't we usually have a period, 5, 10, 15 minutes that we kind of like before the next one comes in?
I think Rick's asking for more than that.
Yeah, I'm asking for.
Do all the interviews, score them, and then have a chance to go back to their written proposals.
Right.
Think about it.
Yeah, the only issue, Rick, is that the next meeting is July.
We can call a special meeting. I
July
understand that.
28th, Yeah.
We may have to.
Yeah.
Yeah.
So as long as y'all are fine with that, I think that's perfectly good.
Okay. We can do
I
that.
know it's a lot of meetings, but we only do this hopefully once every
it's
5
huge.
or 7 or 8 years.
Right.
yeah, hopefully less.
Right,
Yeah.
so
A lot of money.
So,
we gotta put in the work.
Okay, so we will try to incorporate that type stuff into our thing, so, okay. Any
All right,
other,
what's the process?
we're all gonna,
Summarize it for us, Tim.
Ron's just gonna decide and tell us.
that's right. We're gonna have all our requests in, we're gonna send out these
Sherry's.
scoring sheets to the panel. We're going to assemble these scoring sheets from the panel by May 8th. We're going to meet on May 15th with the panel. Panel will talk about the different things, come up with the final set of 3. We're going to then try to meet with those people on the 28th. 26th, sorry, it's your fault. 26th. At that point in time, you know, we're going to incorporate a pretty full day for that particular venue. We're going to try to have the score sheets available. We're going to try to have questions, specific questions that we should ask each individual group. After that point in time, we will have a discussion and maybe a post-scoring type situation. And then what we will do is take our time and meet a week or so later. Does that sound about right? Sometime in early June to talk about the final results.
And when do the panel members from the employees get involved and how?
They will start with the scoring system with when she sends that email out with the new score sheets, she's sending that out to the entire panel. And then,
Okay, the entire panel is gonna score, they're just gonna see the scoring sheets from us.
no, they're gonna score also.
They're also
They're
scoring.
gonna score also?
Yes, sir.
So we're gonna have 12 scores,
Yes, sir.
okay. And that's gonna come back on the 8th?
That's gonna come back on the 8th, and then we're gonna meet on the 15th, and we're gonna have the 2 large panel
Okay.
for Ron to meet on the 15th.
Presumably somewhere between the 8th and the 15th, someone's gonna take all these scores and summarize them.
We got computers at City
Yes.
Hall, don't you?
We'll be handling that.
No, we have.
Yep.
And then, so I think that surmises, that sound like what everybody's thinking?
Yes, sir. Ron, are you still coming?
He's deciding.
He's deciding.
I'll let you know later.
He's gonna score, he'll promise that much,
Okay.
okay?
Well, Ron, as being such a big advocate for the Retirees and Employees Association, you probably should be there. That way you can be a voice to help them along, a voice on the panel.
To me, 12 is too many people, though. That's just my opinion. That's overwhelming to anybody.
It's jury size.
That's true, Chris, that's true. Hopefully, I never have to sit in front of a jury.
Sherry,
Yes, sir.
we're going to move to you.
Oh, okay.
Let's get this done. Let's get this done.
All right. Okay, so the notifications we already kind of went over when Pedro was speaking about the
Right.
60-day notice. The forced distributions, we've already kind of went over that. Oh, Pedro, are you still there? Pedro?
Yes, I'm still here. Yes, I'm still here.
So I had mentioned to you about the summary plan document that we haven't done, and I think you checked your records. Since I've been here, we have not done a summary plan document, and I noticed that other pension plans were doing that, and so I wanted to touch base with Pedro because we haven't done it since I've been here. I've been here 7 years this year. So I asked Pedro if we're supposed to be doing that, and I thought we could refer to Pedro since he's on the call anyway, of
What do we do with that document?
Send it to the employees.
It's what?
Summary plan document, it describes the pension plan.
Right. So the summary plan, it's a summary plan description. It's essentially the Reader's Digest version of your plan of the pension fund. So that I'm sure you guys have tried to read the ordinance. It's not exactly the most lucid piece of reading you've done. So the summary plan description is really an attempt to try and summarize the benefits that are available and eligibility requirements for the members and the participants. It's really used, it's a good tool for obviously the members to have, but also I think more importantly for beneficiaries to also have, because obviously if we're working here and you're working here, you probably know more about your pension than most, but for spouses and kids and things like that, which God forbid something happens to our employees or to our retirees, it's a useful tool for those folks to be able to just quickly reference what's available and contact people in order to take any necessary steps. So I would recommend that we go ahead and we update our summary plan description, and I can have that for you all to review. I think you said your next meeting was at the end of May, so we can certainly have it then.
And then Pedro, how often are we supposed to send that out?
We should be doing it every 2 years.
Okay.
And that's required in the ordinance or state law or where?
It's required under state statute.
Then we ought to do it.
Then we ought to do it.
Required in what?
State statutes.
That's why I wanted to bring it up, because I haven't seen it yet since I've been here.
Once
so.
every 7 years?
2 years.
We've never done it?
Not in 7 years.
But I've seen it.
Well, then we should do it.
We should do it. Okay.
Okay. All right, and then my refunds report, if you guys will look at that.
Move approval.
Second.
All in favor?
Ah,
Okay. Any more comments from the public? Next meeting date is board meeting day is May 26th, but we have this little thing on May 15th also, and this deadline by May 8th that everybody needs to remember.
Yes, sir.
So. On.
Beg your pardon?
Have a motion from you?
What?
Move to adjourn.
Yes.
Move to adjourn, absolutely.
Second.
are you sure?
Rick,
No, I want to stay
apologize
here
for
another hour.